Many homebuyers don't know the right questions to ask their lender to ensure that they're getting a good deal on their mortgage. So my goal here is to equip you with the right questions to ask. And first, I will need to educate you on all the different factors that can affect your mortgage rate. So briefly, pretty much all mortgage lenders have the same loan programs and the same guidelines, but their rates and pricing can vary. So within those products and guidelines, there are certain variables that can affect the rate that each lender can offer. So those variables are common things such as the loan amount, the down payment percentage, what loan program you're going with, what your credit score is. That's one of the biggest determining factors. The term of the loan. So all these different variables and some other variables can have an impact on your mortgage pricing. So first off, if you contact a lender, which happens often, a home buyer will contact a lender and say, what rates can you offer? And that's the first thing that comes out of their mouth, and the lender doesn't know anything about that home buyer. Well, if the lender gives you a rate quote without asking any questions, that's kind of a red flag that they're not really giving you an accurate quote, because they can't unless they know all these different variables. Okay, so we've gotten that out of the way. Now let's say you want to shop around with multiple different lenders to obtain rate quotes and see who can give you the better deal. A very big mistake that home buyers make is they call up multiple lenders and they say, hey, what rate can you offer? And the lender might give them a short answer and say, oh, we can offer 5%. Then they call lender number 2 and the lender says, oh, we can give 5.25. And the lender number 3 says, we can give 5.5. So the home buyer might sit back and look and think, well, I'm going with lender number 1 because they have the lowest rate of 5%. But there's really no way to accurately compare which lender is giving you the better deal by knowing what rate they're offering alone. There are 2 very important components that you need to know as well. And that's the lender fees that the lender is charging. And you also need to know if they're charging any discount points in connection with the rate they're charging. So first, the lender fees. So each lender will have slightly different lender fees. Common ones are like processing fees, underwriting fees, credit report fees. There's all different fees that lenders will charge, and each lender is probably going to be a little bit different. So you may find one lender that charges very high upfront fees and another that has very reasonable upfront fees. So that's the first thing you need to know, is what lender fees they're charging. Also, you need to know what discount points they're charging with the rate that's being offered. So technically, any lender can offer you any rate. But the lower the rate that they offer, the higher amount of discount point fees that they charge. So discount point fees are a fee that you would pay in order to get a particular rate. So typically each lender is going to have what's called a par rate. That par rate means that they're offering you that rate without any upfront discount points, without any additional fees in order to obtain that rate. But let's say their par rate's 5%, right? And you want to get a lower rate, and you have the option to buy the rate down. So maybe their par rate's 5, but if you buy the rate down to 4.875, you can pay an upfront fee at closing in order to get that lower rate. Again, it's called discount points, and usually it's worth paying discount points if you know you're going to be in that loan for at least 5 years. And that's really tough to determine because you may refinance down the road or you may sell the home. So, sometimes you really have to analyze whether or not you would want to pay discount points. But that becomes a huge factor because a lot of lenders will give you a low rate quote knowing that you may not know to ask about the discount points. So, when you compare all these lenders, again, the first 3 examples that I gave, 5%, 5.25, 5.5, you may think, well, I'm going to go with the 5% because that's the lowest rate. But it may be possible that that lender that's offering you the 5% may have to charge you discount points, and sometimes they can be pretty excessive, like 10, 20,000. Sometimes these lenders get crazy with these rate quotes because they know you're not going to ask about the discount points, so they quote you a really low rate so that you go with them, and then they potentially might surprise you with the discount points later on. So maybe that other lender that's offering 5.5 is not charging you any discount points. So in many scenarios, a rate of 5.5% with no discount points can be the more favorable and cheaper option for you than choosing the rate of 5% with, let's say $10,000 in discount points. Because if you're going to sell the home in the next couple of years, or you're going to refinance, the upfront fee that you paid wouldn't have really been worth it because you wouldn't have seen a gain back from the lower interest rate and the lower monthly payment over a period of time. Okay, so if you do want to shop between multiple lenders, you need to be very clear with your questions. You need to ask them, what is the rate? What lender fees do you charge, and what discount points would be charged as of today for the rate you're quoting me? If you don't know all 3 of those things for each lender that you're getting quotes from, it's pretty much impossible to compare lenders and determine who's giving you the better deal. Now, here's one more very important component to this. You need to ensure that whichever lender you choose locks in the rate and the pricing that they've offered you sooner rather than later. So typically the lender would not lock it in until you actually go under contract to buy. But what could happen is if the lender is not efficient about making sure they lock in the rate at an early period, or at least having discussion with you about your options to lock in the rate, you could go under contract to buy a house. Let's say it's a 30-day close, meaning from the day you go under contract to the day you close will be a 30-day period. And let's say you're going through the loan process, you've shopped the rates, you chose your lender, and they confirm what the rate is, the discount points, and the lender fees. So you think you have everything under control, but you didn't know that the rate needs to be locked in. So maybe the lender is kind of careless with locking in your rate. You go 2 weeks, 3 weeks into the loan process, and the lender calls you and says, hey, we got to get this sent off to the underwriter for final approval. And by the way, now it's time to lock in your rate. And unfortunately, that rate quote that I gave you 2 weeks ago is no longer valid. Rates have gone up, and now we have to offer you a 0.5% higher, or we have to offer that same rate with $5,000 more in fees, or whatever the case would be. So you need to ensure that when you choose your lender, you go under contract to buy a home, you confirm that you want that pricing locked in and you want proof that it's locked in. And when they do lock in the pricing, when they lock in the rate, they have to send you what's called an updated loan estimate, which will show that the rate went from floating to locked, and it will show the amount of time that the rate's locked for. A typical lock period is like 30 days, which would usually cover your entire contract period. And then also on that loan estimate, it'll show all the fees associated with that rate that was locked. So that way you can ensure that you're not going to have any surprises later on. So hopefully you found this info helpful. If you plan to buy a home in the future and you use all this information that I've given you here, it's very possible that you could save yourself tens of thousands of dollars, not in just upfront fees, but also on making sure you get the best rate.